Welcome back, everybody. Hope you enjoyed the first session with the presentations, and now we are moving into a panel session where I'm going to be asking some questions to 4 panelists who I will ask to introduce themselves in a moment. And also, if you have any questions, please use the Slido app on your phone. You've got the number on a QR code on the back of the leaflet. So to put any questions that you have to the panel, which we'll take up at the end. So if I just start with Richard on my right, and then if everyone could introduce themselves, because we've had a change to the advertised, one of the advertised panelists. Thank you.
Hi everyone, Richard Streeter. I'm a partner at Eversheds, Sutherland. I head up the clean energy construction practice there. And we act typically for developers, clients on large offshore wind projects. So yeah, today's been very, very interesting hearing from the other side.
I'm Marianne. You saw me before, so you were asleep. Don't remember.
Hi, I'm Rob Bates. I'm a partner at NARDAC, which is an insurance broker specialising in renewables. We place offshore wind, floating offshore wind, interconnectors, lots of sort of marine renewables lines of business.
Good afternoon, I'm Harry Priestley and I'm the Category Director for Logistics at Corio, so looking after all the ports, transport and installation across our portfolio. If I say anything that offends anybody here, my name is Damien.
Thank you, everybody, and thank you, Harry, for stepping in and helping us out at the last minute. So I just want to sort of set the scene. We see on an almost daily basis reports that contracting in offshore renewables is becoming increasingly unsustainable, with huge losses being reported, and Ian covered that in his keynote earlier today with some of those figures. And so the question to the panel and to think about in general for this session is, how can we ensure a fairer allocation of risk that recognises the reality of offshore construction, the risks involved, and reflects the need to encourage the development of increasingly technologically advanced and unique project solutions? So that's sort of what we're going to think about. So I'm going to start off, Marianne, if I could ask you a question, because you raised it in your presentation earlier today. The delivery of complex projects always entails careful management of change. What key issues arise in the offshore wind projects, and how can they be best minimised?
Okay, I mean, I think what I was referring to earlier was the sense that, what we do is very complex. There's always going to be things that change in the course of that. I think coming out of, for example, the oil and gas industry, there's a bit more of a sense that when things change, there's a discussion between contractor, suppliers, clients, and an agreement is reached and on you go. There is less focus on recording that, getting a variation, getting clarity, etc. And I think a lot of contractors have fallen into that trap, as it were, of thinking, right, clearly this, this piece of work is outside our scope, therefore clearly I will be paid extra for it. So they just crack on and do it. And it's only after the event when the time has been spent and the money's been spent that people sit down and find that they're not actually aligned on that. So I think it's much more care about kind of the painstaking element, I suppose, of change management. The sense of complying with the contract. That's sort of almost a sort of insult for some people, isn't it, to say you're being very contractual about this. But actually, we kind of have to be. You have to tick those boxes. I touched earlier on the time bars within a lot of the contracts. Literally, if you don't get it done in time, depending what your contract says and what law you're under, but it's quite likely that you miss the chance to claim extra, even if you have done work that's outside the scope of your contract. So I think that's what I was touching on.
Would anybody else like to comment on that?
I can follow up,
yes,
if that's
please,
okay. I mean, the idea of a time bar is maybe something which obviously would upset a number of people. Things take time, and that's understandable. The idea of giving warning and giving early notice has actually existed in oil and gas contracts going back certainly as long as I worked. I remember working as a contractor, putting in a variation notification and being told that you're too early, despite the fact that the contract said as soon as reasonably practical notify the client. So these things have been there. Quite a big fan of...
Too early.
Yeah. I kid you not. It was... but for what is really useful about it, and I know the administration is quite tough on people, but the early warning notices, the early notification is actually a good thing to have if you use it in a pragmatic and risk-reducing way. If you use it as a mallet to bat a supplier, then obviously, you're not going to collaboratively go forward with things. But if you use it as a way to proactively manage risk, then that is a different conversation.
What do you think are the key factors that can create an imbalance of risk and reward at the contract negotiation stage? Who would like to pick that one up? Richard, I was thinking perhaps.
Yeah, the key factors. I mean, this is obviously, I was talking with colleagues earlier about this. It's where you have a tender process and you want to run a tender process with as wide a selection of the market as possible as an employer. You're trying to maintain that competitive tension by almost having the bidders fight amongst themselves, and that will be, but that comes at as an internal cost in terms of the amount of time it takes to run those sorts of processes, the ability, the bandwidth of the client to be able to run those processes in parallel with other packages. So, but it's something that they want to be able to do for as long as possible, and that's why you see packages being let over quite a long time. Up to 2 years, you see the packages gradually being put in place, and I think that's largely designed to create that competitive tension in favour of the client, but also to manage their own ability to run those processes. So that's a key factor. But otherwise, I mean, it feels like the market is shifting from where I'm sitting. I think I'm seeing the contractor side of things gaining bargaining power. The clients are in my world. I think I see they're stepping back. They're starting to negotiate with contractors that are just saying no, and it's almost as if they've sort of, there's been a point at which a line has almost been crossed. It feels that the pushback in risk being pushed down to contractors has been happening gradually, increasingly over time. And it feels like there's sort of a collective lines being crossed with the market, and they're saying, you know what, this isn't acceptable anymore, and we're now prepared to walk away. And that's a decision that's been taken at a board level within our organisations. And let's just end this conversation now if this is going to be your absolute position. And clients are I think they're sort of waking up to the fact that there's been a shift in the wind is blowing in a different direction, and I think that's largely as a result of these black swan events that we've been having, commodity prices, inflation, etc., etc. But I think that's all combined with a general enough's enough.
Would you agree, Miriam?
I know. I'm just sitting here nodding because I think that's absolutely right, and interesting that you're seeing it from that angle, because that is the decision that's been made. There's a certain level of, I think there's much more clarity, certainly in our organisation, about the level of risk that we're prepared to take as against reward. I'm sure that's true, across the board, and much more willingness, as you say, to set a bar at a high level so that people in the tender teams can follow that. I mean, I think it goes back to Ian's hockey stick previously. There's a huge amount of ambition, but there's only so many vessels in the world. So we are in a very different place from. Maybe not in a very different place, but that mismatch between the ambition and the number of vessels is really playing out now. I think what might be interesting to see would be how we touched earlier about project financing. How. Oh, sorry. Can nobody hear me? I'm switched on. It was switched on. Okay. Absolutely useless at using the tech, obviously. We touched earlier on project financing. I think it would be interesting to see how lenders react, because they obviously start from a taking zero risk basis. You can kind of understand that, but if the market is pushing so hard back, the supply chain's pushing so hard back, where is that going to end up? I think that'll be quite an interesting dynamic.
Anybody else?
Yes. Maybe my microphone's not working either. I think another key factor is time, like when, say you've allocated all the risks between the contractor and the employer, then when you come to negotiate the insurance policy, which might be 2 years after you've negotiated that contract, what you're able to transfer to insurers and their reinsurers might be very different from what you expected to be the case 2 years ago. The insurance market is very dynamic. It changes a lot. And if there are big claims, particularly in the US, as there have been, that will change the coverage that is available to you and your employers. So, yeah, that's definitely a factor to consider.
I think on the lender point, I think lenders have always been, they've always tried to push down risk, as we all know. They don't want their borrower sitting with any more risk than they absolutely have to. I think sometimes the banks are also used as another way of leveraging a bit more out of the contractor, or the banks are requiring it. So, if you want this project to happen, you need to give it. So maybe clients have been a little guilty of that in the past. But I think on the whole, whenever we've engaged with lenders, they've been pragmatic. They just want a strategy. They just want to see a plan. They just want to understand that the risk is there and it's been thought about, and this is what we're doing about it. And I think if clients go with a strategy, go with a plan, go with an answer, I think by and large lenders are bright enough to accept that. And yes, they might want more contingency. Yes, they might want more money in the bank with the borrower to cover these potential other risks that are now not being passed down. And yes, that's something clients are going to have to deal with. But I think the lending pool is still liquid enough. I think there are still enough lenders out there hungry, wanting to put their money into offshore wind. So I don't think we're going to see them leaving the sector in droves just because there is a shift in maybe the risk profile going forward. That's my prediction.
So you're basically saying we should push back more against lenders. That's what I took from that, I think.
I feel like there's some developer bashing going on. You have to give a thing back to sort of historically, when the offshore wind market was growing, as Ian said, 1 gigawatt, 2, 3. There's the time when there was an oil and gas recession as well, so there was very little activity. There's a race to the bottom in terms of who can get the lowest CFD price. So everything is screaming, squeeze and squeeze and squeeze. We've reached a point probably a couple of years ago where that's no longer the case. We've now got an ambition that we need to build. We need to build that successfully, and we need a sustainable supply chain in order to do that. So we're at a very good point in the industry where there's an opportunity that we've had to re-engage on certain topics which probably weren't there before. There is still an upturn in oil, in oil and gas at the moment, or at least it's better than it was, a number of years ago. So with that, there's a supply and demand imbalance, which works in the favour. But we can go round in circles now, and we can hammer all the developers until there's not enough projects to service the market, and then we can go round in circles. Or we can do what I think, is at least a good part of this discussion, and putting these contracts on the table to say, let's not go round in circles. Let's try and find a solution where it's a sustainable industry for all.
Can you hear me? Yeah. So picking up on your point, Harry, about oil and gas, and Ian mentioned that some of the contractors are going back to the traditional oil and gas projects because offshore wind is just not paying enough, or it's turning out to be unviable. What do you think are the types of issues that are making it unattractive at the moment and unviable? And we've obviously been speaking earlier about the insurance aspect, which we'll come back to, but are there any other issues that you think make it unattractive at the moment?
No, it's not working. Oh, no, it's working. Perfect. Can I just say margins?
Yeah.
Is that Dutch enough? No, the certainty as well. I think this is one of the biggest problems that we see at least in my daily routine. being at the kind of corporate procurement level, we're desperately looking to see how we can make life easier for ourselves and our contractors to look across projects. Can we standardize technology? Can we look at supporting longer term partnerships when it comes to the use of vessels, equipment and tools and all of these things? And it's always the same problem that comes up. How much certainty do you have on projects in the near future? Look at the bad news that we got on Boreas, that had contracted. Plug's been pulled. Same with Ørsted. That's from my experience, and things may have changed. I have left the industry, but from my experience in oil and gas, there was a little bit more certainty on a longer basis. So therefore, you could commit, and you could then explore value engineering and ways to actually, together with your supply chain, deliver a successful project. In offshore wind, it does tend to be there's no certainty, and then bang, build it. We could do with a longer outlook.
Anybody else have any comment on that?
Just agree with that.
Yeah.
I mean, I think am I switched? It is switched on, but can you hear me? Yeah. So the role of government, I think, is really important. In that technical moment, I've completely forgotten the other point I was going to make.
Well, I was going to say that the allocation round 5, where no one bid in for any of the UK projects, should serve as a bit of a wake-up call, certainly to government, that there needs to be clearer market signals and longer-term certainty for developers to get interested again in fixed-bottom offshore wind, because otherwise there's absolutely no hope of meeting their legislated and very aggressive targets for this industry.
And if I can just pick up that point, it was going to be a later point of mine about the role of governments, but just reflecting on the government commitments, which Ian has already mentioned about the increased targets, but also reflecting on the fact that right now we've got COP28 in progress, and we've seen increasing government pledges for renewable energy. US Vice President Kamala Harris announced that more than 100 countries had signed a pledge brokered by the US, the EU and the UAE to triple renewable energy production by 2030, which is only 6 years away. Now, that will be all renewable. It won't be just offshore wind. But, I mean, these huge pledges coming out from governments and not really reflected, as you say, Robert, in the round of licensing that there was no takers for. So do you see a particular role for governments? We talked earlier about, and Harry, you mentioned port infrastructure. We know that in the US, some of the ports are just not big enough to take the increasing size of the turbines or the increasing size of the vessels. Where can governments have a role to play there to sort of help bring the market about?
I mean, firstly, it's great that we have all these pledges. Corio, we've got Jonathan Cole out there, and you can see, well published. We're really supporting all of this. We've sent a big team over. But at the same time that COP28 is going on, there's been several delayed auctions, which are delayed 6, maybe 12, maybe more months, across other European countries. So I think it's great that, the whole world has come together to try and, forge a way forward on the agenda. But, we need action. And I think that was the same the previous year and the year before that. A lot of the feedback that we got was, it's great to make all these pledges, but then you have to deliver. You can't just promise. Because if you keep promising and not delivering, nobody believes you. Ports is an interesting one. It's very difficult to come up with a solution, mostly because obviously it's the location to projects. So it's great if you've got a port which is almost centrally located to a large number of offshore wind farms, especially in the O&M space. But certainly it's something which, a lot of investment is going to be needed. And, like many other developers and also the ports themselves, we are, all ears to trying to explore, how to do that, how to make sure that governments can actually come in and support. Really, the question at the moment from governments when you do speak to them is, we'd like to invest, we want to invest, where do we invest? Or in what? So, there's going to be many more conversations, and unfortunately just now, there isn't a clear direction of travel.
Just one other thing I think we can do as an industry rather than in terms of government is get some
realism around technological development. And I think we're kind of getting there, but we were going through a phase, weren't we, where everything had to be bigger, better, faster, longer, and so you're constantly in a state of flux and design development and uncertainty of risk. So I think that penny has sort of dropped a bit, hasn't it? And we're kind of trying to sort of consolidate where we are and get some, but that ability to kind of look ahead and plan for the next few years of, what size of foundations, what size of turbines have we got to deal with, etc. I think that has been something which has made potentially the industry unviable. But I think if we can get that right, that would help.
Yes, we've seen two of the larger wind turbine suppliers, Siemens and Vestas, both say we're not going to keep doing this arms race to bigger and bigger turbines because they're all losing lots of money. And it's difficulties for the contractors because you might have designed a vessel that can hold a 10 megawatt turbine, and then next year Vestas release a 12 megawatt turbine that vessel's basically obsolete for. And the insurance market is aware that everyone needs to make money on these things. So Siemens and Vestas have come out and said we're not going to go any further than this. It's 15 megawatt, and hopefully that brings a bit more certainty to everyone else's timeframes for getting payback on these vessels.
Robert, I just wanted to come back on the presentation that we heard from Amber about the deterioration in the car cover for offshore wind and the fact that a combination of activities in certain areas of the world and the contractual allocation of risk have led to an increased risk profile for contractors. So I know that we had some questions earlier about the cost of insurance and the procurement of insurance, but is there any other comments that you'd like to make in relation to that weren't made earlier?
Yes.
Please go ahead.
I gave a bit of a sneak peek earlier, so sorry to spoil the surprise. But yes, insurance has got more expensive and difficult to procure for offshore wind. And the main reason for that is that insurers are taking in less money in premium than they're paying out in claims. For offshore wind in particular, it's probably for every dollar that they take in premium, they're paying away about $1.20, $1.30, particularly on construction. Operational projects tend to run a lot better. So they haven't been as badly hit on operational projects, but construction has been a poorly performing business line for them. There are other factors at play here, though. So we're in what's called a hard market for insurance. That basically means because of large claims everywhere around the world, not just in offshore wind, the supply of insurance has reduced. And it's a kind of classic supply and demand dynamic at play. So less people willing to give you coverage or less willing to give you as much coverage than before. There's been long-held views around the price adequacy of the rates in offshore wind, given the cover. The cover is quite broad and similar to oil and gas, but the rates were a lot less than in oil and gas for a long time. But what we have had is a very, very sharp knee-jerk reaction from the insurance market, which has been basically to double the rates that they charge and to double the deductibles that they levy on contractors and owners. And we feel quite strongly that this is not a sustainable position for people to take. Now, the good news is that offshore wind looks great to shareholders. So there are lots of insurers looking at, new insurers looking at offshore wind, thinking this can be a new line of business and a profitable one for them. So there will be some more competition that comes into the insurance market. And there has been some big players from the oil and gas insurance market who've come into renewables. But this will take time. There's still lots of big claims out there that insurers are feeling the pain on. It will be, a fairly slow and difficult 6 to 12 months.
So going forward, how can we ensure a fair allocation of risk, crucially at a reasonable cost?
So I think there's a number of things you can do. Early engagement with all the various parties is really key. The topic of the day is collaboration, and there must be more collaboration. Stuff like this is great. My clients tend to be employers rather than contractors, so it's good for me at least to meet more contractors and speak to you guys and feel what your pain points are, which are sometimes quite different to most of my clients. And assurance, so marine warranty surveyors, all the various third-party verification services that they offer can be a really good way to unlock better coverage. So when I mentioned the cable protection clause, one way we've managed to get that clause, or exclusion rather, deleted is by having expert testimony from third parties who say, yep, what the contractor and supplier have proposed is technically adequate for the project, and therefore you don't need to worry about this as a loss. So definitely third-party verification is a big help.
Okay. So one of my questions, and you've touched upon it, early engagement. Would the panel agree that the key to facilitating closer collaboration is early engagement, given that this whole session is all about collaboration?
Yeah, definitely. I mean, I was just reflecting on something that Kays was saying earlier about some of the key topics that always come up. You know, LVAD being a key one that always gets pushed back on, and it's always absolutely crucial for contractors. You know, can we? I mean, I guess this is all, having this discussion, having the IMCA principles is all part of this debate. But can we pull some of those issues out and get some kind of industry standard approach, or at least some kind of alignment? Because we always seem to start discussions there at complete opposite ends of the table. And that's a particular one. I mean, you mentioned soil conditions as well, and that's another absolutely crucial one where you always end up, we always start at completely opposite ends. I mean, surely there is some sort of, whether it's early engagement or whether it's a sort of more of an industry standard type approach to how we deal with these issues. But it just, they're really too complex, and we're starting from too far apart a position to be able to deal with them every single time we're trying to enter into contracts. So, yeah, yes, early engagement, but also perhaps sort of what we're doing today, more of this kind of engagement on those really top issues, which I'm sure all of us end up arguing about when we're trying to enter into contracts.
I think Robert has a point there.
I'd just like to take up on these sort of, you know, insurance people can allocate risk and push paper around and push risk onto different people, but that does not very much to mitigate the real world risk of installing a cable in the North Sea when it's 2.5 meters significant wave height. What's you know, Rob Bates in London going to do about the risk then? Absolutely nothing. You know, there needs to be more focus on standards, guidelines, training. I think there's been, particularly in renewables, a bit of a reluctance to take up lessons from oil and gas. I think there should be less of that reluctance because you know, the training and guidelines and permits to work that you see in oil and gas could be usefully transported into renewables. And then I think underwriters, you know, the people who are pricing these policies would get a lot more comfort, and then I'd be able to get you a better price.
Okay.
I think you could maybe caveat early engagement that, you know, it's got to be that engagement part where you actually look to if not to contract, to at least be working together, rather than just early engagement, come and give us the 1 out of 10 rounds of a tender that you're going to run to get to the lowest price. It's got to be meaningful, you know, and we've also got to move away from, you know, collaboration is almost just as much as a naughty word as framework now in offshore wind, and the number of empty agreements, you know, that get signed. So you've got to give something meaning in order to go forward. And I think that, you know, the value engineering and the work that the suppliers can do, you know, there's got to be a level of trust involved. It's just one point that you made on the latest availability clause. I'm actually a little bit surprised that it's getting so much attention, because latest availability clauses, from my experience in developers, you know, we've been able to negotiate a fair and reasonable point fairly quickly from sort of 2018. So it's actually a little bit of a lesson learned for myself here to understand that it's obviously a significant, you know, sort of issue elsewhere in the world, but certainly in the non-Scandinavian developer world, it's been something where you can definitely find a middle ground.
And I think on the early engagement side of things, I mean, if I look back, I mean, I know I don't look it, but I'm old enough to have worked on Barrow, which was probably our first turnkey offshore wind farm in the UK. I didn't have many more of those after that. But if I look at the progression, and I look at the amount these days of reservation agreements, preferred bidder agreements, and these sort of early contractual steps now which are being taken by developers to lock in the supply chain well before they get into contracts, sometimes well before there's even a FIDIC being thrown around. You know, you've already got people being locked in on these types of agreements. I think that's a big step forward, and I hope that is something that's being recognised and welcomed and is seen as a benefit, because I think it's been a bit of a stretch for clients to do that, because, as I say earlier, for all the reasons around competitive tension, their instincts are to keep everybody running. And you know, I have been in those negotiations for a client where we've effectively got to sign contract, or a contract that was capable of being signed with 3 different bidders, and then they made the final decision at that point. And that seems a long time ago. And that sort of.
There is maybe one point on that. One of the biggest blockers for as a developer to making an early contract is pre-FID capex liability. This has to be signed off. Now, in the past, you could negotiate. Let's say you could negotiate an early works agreement, and you'd maybe tag on 80% of a contract behind that. So you've got to negotiate the last part of it in some form of exclusivity. Right, that's possible. What's your liability? 500,000, 2 million is quite low. We're now seeing 30 to 50% of contract liability, 100% contract liability being asked 3 to 4 years in advance. And then the supplier is saying, you know, are you going to commit? No. Nobody's going to sign that off. It's only if that 4 to 5 year period before you have a project that you have absolute certainty that this is the one and only option for this project to happen, then it's a discussion. But if there's any doubt that there's an alternative solution available, you know, the developer's going to continue to explore. So I think that's maybe an aspect to the room that I notice is mostly, you know, contractors. That's probably an aspect to say, if there's a way to contract and engage earlier that can help manage that risk, not reduce it or, you know, make it go away, to manage that across projects, then that's something which means that a developer's more likely to then engage much earlier, and then that word collaboration comes into play from there. But at the moment, with the escalation of pricing plus, you know, inflation and all the other storms that are happening, the huge rise in pre-FID capex is really difficult.
Harry, if I can just pick up on that question, on that point that you've made, how does the client then promote greater collaboration between contractors that may be tendered on different timelines? And at what point in the tender process should commitments on collaboration be given?
That depends on who your client is, I guess, and what their strategy is. I mean, speaking for Corio, we obviously, I mentioned before, we want a sustainable supply chain, which is sustainable financially. So we're looking for ways that we can engage much earlier. So that could be sort of 2-3 years before obviously works are starting, to try and increase the amount of time that we have to bring value to our projects. But, you know, contracting before consent, very, very difficult. So it's usually somewhere between consent and whatever the CFD mechanism would be. And it does change depending on the country, depending if you have to enter into an auction round or if it's, you know, an off-take and price at a stage. So unfortunately, it's a lawyer's answer. It depends. But we're all ears and we're listening. And I think, you know, a number of suppliers would probably agree that, you know, we're coming to the table not saying this is the timeline. You know, we're coming to the table saying, we think this is a good timeline. Can you help us? What fits in with your schedule? You know, do you have any other projects? Can we move this program? So I would suggest that actually we are starting to make those steps. The next one would be to not be transactionally, so not do this on a per project basis would be great, but one step at a time.
Anybody else like to comment on that? No? A question perhaps for Richard. Are there any benefits in multi-party interface agreements, or do standalone contractual provisions promoting collaboration work equally as well?
Yeah, well, I mean, when I work on the interconnector projects, you've got the converters and the cables being negotiated in parallel, and then you have an interface or a cooperation agreement signed with your 2 chosen package providers, and that adds that extra layer of cooperation, collaboration, interface between the 2 chosen contractors. It puts them in contract with each other, so they can they have commitments to each other, rather than that sort of bilateral arrangements with the employer every time, but you're actually not in direct contract with your fellow contractors. So I suppose, can that be applied to the offshore wind market? Because I'm not seeing those separate standalone offshore wind cooperation agreements or interface agreements signed up by your pool of balance of plant contractors. And it feels like that's an opportunity. That feels like that's an opportunity that isn't currently being explored. Now, that might be because projects are tendered on these long timelines, and actually how do you have a multi-party negotiation on a coordination agreement when you don't yet know who the parties are? But it feels like that's an opportunity there, and it might take some of the sting out of the EPC. It might take some of the sort of the pressure for the employer to be pushing everything down. You've got to do this. You've got to verify this design. You've got to be ready by this date. Actually, if you say, well, if I put you in contract with each other, and you manage that between yourselves, is that actually a way forward? I don't know if any of that feels like there's any possibility with any of that, but it's...
I think I might pass this to one of my colleagues who've been in the contracting business for longer, but it feels to me that a lot of contractors would feel that's another layer of responsibility that is being sat with them rather than with the employer having that overarching obligation. So I suspect that might be a difficult sell, but perhaps others will jump in and say that I'm wrong on that.
I mean, it does exist. So in offshore wind, it has been used again and again. How much value does it have? I don't know. I've never asked, to be honest. I'm a massive fan of interface registers and roles and responsibilities. I'm 10 years contract manager, sitting down with the Excel spreadsheets managing these FIDIC contracts. So, I mean, obviously I lean towards that. It's interesting whether or not, if you put something into a contract, how much impact it would actually have. The NEC, or the recent edition of the NEC, put in this clause that the parties shall act in, mutual trust and good faith, which is very subjective. But that has been tested in the Scottish courts on a very small case. As one party didn't act in the interest of the other, for example. They're, quite selfish. So, do we want to go down that road? Maybe a bit more trust. But certainly, everybody says they'll work in good faith and trust until they don't. So, perhaps that's why they push things down in writing.
I would just add, if you or your employer are able to provide like an interface register or a responsibility matrix, that massively helps me as your broker to negotiate on your behalf, because it shows them, the underwriter, that you've considered who is responsible for what and where the interfaces are. Because we've had, a lot of claims in offshore wind construction, and some of them have been down to no one really knowing who was due to do what. So it's a big plus in the column when they start doing their maths.
But I think having clarity about whose roles, and obviously that's incredibly important, but that's slightly different, isn't it, from placing responsibility on contracting parties to kind of manage that interface relationship, potentially.
So I just want to pick up, Harry, you mentioned FIDIC, and we heard from Marianne earlier about the difficulties with FIDIC. I was going back through some old notes that I had from... It's actually from a London law firm back in 2013 from their Energy and Offshore department. And I'm going to quote, "The use of a standard form contract drafted for use for the onshore construction industry, such as FIDIC, is rarely the best starting point." So that was in 2013. And at that time, they went on to say, "There are no standard forms designed specifically for offshore wind yet, but moves are afoot to develop suitable forms." Now, 10 years later, IMCA has done that with the standard contract that we've come out with for T&I. I mean, can you foresee this contract being used by clients? And what do you foresee, and I put this to Richard as well, what do you see are the barriers for adoption of the contract?
Not on the first draft. Look, I mean, the industry moved onshore to offshore. those that were familiar with FIDIC onshore went offshore and took their form of contract. Just like if you speak to those with a more traditional oil and gas background, they love a logic contract. But I can tell you that I didn't see many logic contracts from the operators in oil and gas, because just like developers do with FIDIC, they were substantially amended. So call it a logic, a FIDIC, a Flogic, a FIMCO, a BIMCO, whatever you want to, call it what you want. Devil is in the detail. We really do support this first initial draft. If FIDIC had done it, I think they've tried twice so far. You know, if FIDIC have come out with it, we would have given it the same amount of attention. Do we see room for logic? Yes, in TNI contracts. If you go down the route of going down the EPCIs, you know, it's going to get slightly more complex, but certainly with some engagement with lenders, etc., to see some support, there's room. You know, would we use, as of today, the IMCA draft as a base case? No, but there's certainly there's lots of room for engagement there.
Richard?
Yeah, I mean, weaning clients off their FIDIC 99, not even 2017, is a difficult task, especially as these are forms which they've then, of course, added layers and layers and layers of their own additional drafting to. They have teams that are used to using them. They have contract managers that are familiar with them. So, of course, none of this is going to be news to anyone here. This is the inertia around moving people off their current forms is tricky. But I think there is an appetite for a standard form now that wasn't there previously. I think it feels like FIDIC have missed an opportunity by not. Well, as you say, they've tried this in the past and it's not gone. I think previously they tried to just have a renewable form. Now it seems they're going specifically for an offshore form. I personally think they should maybe be looking again into the interconnector market and actually trying to have a contract which actually works as those two worlds come together. I mean, we're in a world now where we're talking about energy islands, offshore wind, multi-purpose interconnectors, coming together with interconnectors. I think that would have been, that's where we should be looking. So I do think FIDIC have kind of missed a chance there. So I think, this will certainly be on the list of contracts that I'll run through with clients when they're asking us, where should we start? What should we use? Or even if they're saying, we want to stick with what we've got, but actually we want to introduce some new principles because we're not getting anywhere with these anymore. And there, I think, forms that have been produced by IMCA can be really useful in informing, well, actually, this is a more balanced risk profile. This is, why don't we take this? And so I think it might not have a role initially as, where do we sign? But I think it can, to the extent we can be borrowing sections from it and transplanting them into the FIDIC. I think that's a more realistic but achievable initial step.
Do you see the possibility or the opportunity to have some sort of a forum where, as you've all said, and I think Marianne mentioned, this type of forum is so useful because we've got different people, the different participants. The one stakeholder that's missing from today's event are the lenders. But do you think that there's any opportunity to maybe progress this where we have a forum where we can bring the relevant parties together to see maybe how the IMCA contract as a first step, and everybody made it clear that it's only version 1, and of course, we will take it forward and there'll be a version 2 and addressing some of the issues. But what do you think is the likelihood of maybe having some sort of an industry forum that can work on this and sort of otherwise it's, as you say, there's inertia to moving forward, isn't there? There's nothing that's going to change the behaviours unless it's sort of pushed.
Yeah, I mean, I think that's a great idea, and I think it seems like the logical next step. And I think there'll be good engagement from the people that you've mentioned. I mean, the lenders as well. I mean, my initial instinct as advising borrowers is always to keep the lenders at arm's length for as late as possible. But sorry if there's any lenders in the room. But keep them. Let's get our own stuff sorted first, and then let's take it to the lenders when we think we've got it all ready and tied up in a bow. But actually, they should have a seat at that table as well. I agree.